everyone, welcome back to the second episode of my stock prediction series. Today we are diving into Apple, one of the biggest and most valuable companies in the world. Apple stock is down 15% year to date and there's a lot of uncertainty around its growth. In this video, we'll predict Apple's 1 year and 5 year price targets and analyze its key technical levels and decide if it's a buy, hold or avoid right now. Before we dive in, I just want to mention this is not a financial advice and I'm just sharing my personal research and strategy here. So please do your due diligence before buying or selling any assets. Alright, let's get into it. Apple is a technology giant with a diversified business model that generates revenue from multiple streams. Here's a quick breakdown of where its money comes from. The first one is iPhone, the biggest revenue driver, contributing nearly 50% of total revenue. The iPhone ecosystem keeps users logged in with regular upgrades. And the second one is their Mac and iPad. These products line cater for professionals, students and creatives. The Mac lineups has grown significantly with Apple's transition to its own M series chips. And the third one is their wearables and accessories. Apple Watch, AirPods and other accessories are high margin products that generates billions in sales every year. And the fourth one is their services. This is the Apple's fastest growing segment, including App Store revenue, iCloud, Apple Music, Apple Pay and Apple TV Plus. This brings in steady recurring revenue and has higher profit margins than hardware. And the last one is their ecosystem lock-in. One of Apple's biggest strength is its ecosystem. If you own an iPhone, you are more likely to use a Mac, an iPad and Apple Watch and their services, making it difficult to leave Apple's ecosystem. Overall, Apple is a cash generating machine with strong brand, high margins and loyal customer base. But does that make a good investment right now? Let's find out. Alright. To analyze the company fundamentally, we focus on few key metrics. The first one here is earnings per share, which is EPS. This tells us how much profit a company makes per share. Higher EPS means the company is making more money. And Apple's current trailing 12-month EPS is $6.29, meaning it earns $6.29 per share. And the second one here we have is price to earnings ratio, also called as a PE ratio. This compares the stock price to the company's earnings. Apple's current PE ratio is $34.89, which means investors are willing to pay $34.89 for every $1 of earnings. And the third one we have is growth rate. This is how fast a company's earnings are expected to grow. And Apple's projected annual growth rate is 13.8%, meaning analysts expect the company's earnings to increase at this pace every year. Using these values, let me show you my projected EPS and price targets for Apple. And also projected EPS, the last key metric we need, which gives us the estimated earnings for the future. If we apply Apple's growth rate, we estimate next year's EPS to be at $7.15. Now, assuming Apple's PE ratio stays at $34, we estimate the stock price for 1 year would be at $249. And that's a potential 19% gain from today's price. And now for the long-term prediction, which is for the 5 year, we compound the growth rate and projected 5 years EPS to be at $12. Assuming Apple still trades at a PE ratio of $34.89, the stock price would be at $418. That's a 99% return in 5 years if the estimate holds. While a 99% return over 5 years sounds decent, it's actually lower than my personal threshold of 200% for a long-term investment. If I'm holding a stock for 5 years, I want it at least double my money and Apple doesn't meet that requirement right now. That's why I believe Apple is currently overvalued and the market seems to agree as it's down significantly this year. But also let's look at its technicals before making a final decision. Right. Apple has been selling off, but let's see where I think is the best price to buy. Here are the key support levels to watch. And the first one is at $195. This is a short-term buying opportunity and potential for a 20% return in 1 year. And then we have $166, a great long-term entry point where I might start a position. And then we have $128, the best buy zone for long-term investors as it would be a 2x return from here. As of now, I don't own any Apple shares and I believe it's still overvalued at $210. However, if the stock drops to $166, I will consider starting a position. And if it somehow falls to $128, I would just load up because that would be an incredible buying opportunity. Now, this isn't a set in stone because these estimates change every quarter based on Apple's earnings report. I'll reevaluate after their next earnings release. So, is Apple a buy right now? For short-term traders, there might be a bounce at $195 for quick gains. But for long-term investors like me, it's overvalued at current levels and I'm waiting for a deeper pullback before buying. Apple is still a great company with strong fundamentals, but valuation matters when investing. Let me know in the comments, are you buying Apple right now or are you waiting for lower prices? And don't forget to like, subscribe and turn on the notifications for the next video in my stock prediction series. Thanks for watching and I'll see you in the next one.